After November 20th, the U.S. stock market may face a trial by fire and ice, with investors uncertain whether they'll rise to great heights or fall to lows. This is because, after the market closes on this day, the most important earnings report in the world is set to be released. NVIDIA's third quarter earnings report, the first since it transitioned from a NASDAQ component to a Dow component. Let me give you a detailed analysis. The video might be a bit long, so feel free to subscribe and follow me for repeated viewing. How high are the market's expectations for this report? Q3 revenue is expected to reach $33.08 billion, an 83% year-over-year increase. Net profit is expected to be $18.46 billion, an 84% increase. Earnings per share are expected to be $0.72, a 94% increase. Everyone knows this is a company with a market cap exceeding $3 trillion. This earnings report might even be more crucial than the December Fed meeting, as it could directly influence the tech sector's performance in the fourth quarter. Before the report's release, many have confidently raised their price targets for NVIDIA. Morgan Stanley raised it from $150 to $160, UBS from $150 to $185, and some even to $210. Beyond the report itself, much attention is on how Jensen Huang will interpret it. The biggest concern is the delivery issue with Blackwell. Recently, this AI chip has had severe overheating problems in high-capacity server racks, potentially causing further delivery delays. NVIDIA's official response is that engineering iterations are normal and expected, with customers currently seizing market opportunities with the GB200 system. This implies that despite the overheating issues, customers are still placing orders eagerly. Clearly, Blackwell is in short supply, with Q4 shipments estimated at around $6 billion. If Jensen Huang interprets this as an indication of high demand, with projections for significant production increases and ample raw materials next year, not only NVIDIA but also global tech could soar. Alternatively, if he indicates production capacity issues, with many orders but unable to meet delivery, and insufficient production increases for next year, NVIDIA's stock might see a short-term decline. Here are three potential scenarios for NVIDIA before the earnings report. 1. Consolidation before the report, gap up after the release. If the stock price remains in the $140–$150 range before the report, with cautious market sentiment, and the results exceed expectations, the price might gap up post-report, breaking $160 and approaching a $4 trillion market cap. This scenario reflects market confidence in the company's outlook, with investors waiting for the report's positive confirmation before making decisions. 2. Pre-report rise, slower post-report gains. In this scenario, the market may front-run the report, with the stock price breaking $150 before the release, partially factoring in the positive outlook. Even if the report exceeds expectations, the price might rise more moderately, as the high expectations have been priced in, leading to more stable fluctuations. 3. Pre-report decline, post-report recovery. If macroeconomic conditions or market sentiment are poor, the stock might retreat to $140 or even $130 pre-report. After the release, there may be a short-term 3%, 5% drop, but this is usually temporary. The stock could recover and stabilize at $150 or even break $160, indicating that despite short-term setbacks, NVIDIA's fundamentals remain strong and market growth expectations are unchanged. In summary, the key is whether the quarterly results can exceed expectations by $2 to $2.5 billion, which is the premise for a significant rise. No one knows for sure, but Blackwell's market launch remains highly uncertain. Any delay, and especially how long Jensen Huang expects it to be, could be adverse news. Thus, the anticipation for this report leans slightly bearish. What are your thoughts on NVIDIA's upcoming report? How will you position yourself? Feel free to comment and discuss. Thanks again for watching, and I hope you subscribe and follow me. Thank you.